Tesla has been climbing and climbing and climbing. If you bought stock just a few months ago, you would have made options level gains just from owning a stock. Really, it's kind of incredible. The biggest question is this price sustainable? Not too long ago, I would have been very skeptical, but a few things have changed my mind. The first major point is the fact that there simply has not been a major sell-off when met with really bad news. When Elon Musk tweeted that he thought the price of Tesla stock was too high, it dropped over 10% in a day, but then it just recovered. This is an insane statement to make publicly as the leader of a massive company like Tesla. This isn't the first time Elon has made crazy statements publicly either. The SEC has actually fined him in the past for manipulation, and I would not be surprised if they do it again. Additionally, the thing that really makes me feel more comfortable with the $1,000 price mark for Tesla is the fact it dipped below 1,000 a couple times and always recovered. It seems that lately, no matter what happens with the virus, with Elon, with the stock price, it keeps coming back to 1,000. If it was truly fragile, you would expect mass sell-offs and collapse. But despite everything it's been through, it's still standing. There's been a lot of stress, yet it still stands. Really, it's incredible. $1,000 is a huge psychological barrier for a lot of people. It popped up, and when it went below, it didn't just crash down. It went back up, and then down, and then back up, and then down, and then up, and then down, and then way up. Going past that number isn't causing people to liquidate. There is a concern that tech in general is overbought, but that's such an involved discussion it warrants its own video in my opinion. Tesla has weathered a lot of storms lately, and it makes me wonder if it's running off something other than just hype. They're currently the most valuable auto manufacturer in the world. To me, that's simultaneously insane, but also reasonable. Companies like Toyota have a legendary reputation of reliability and products that span every single market imaginable and every single price range. They're a solid company with solid engineering and established markets. It's hard to imagine a company as small as Tesla being even comparable when Toyota is moving an order of magnitude more vehicles each year. However, as for why they might be worth so much, data and software. Every single Tesla car sold has an array of sensors gathering data non-stop. Even if you don't have any of the self-driving packages or the 4G connectivity package, they're still gathering data and uploading it. Tesla, by far, has the most automotive and driving data of any company on Earth. Billions and billions of miles with human input for situations that go well and those that don't go well. This is something that takes years and years to acquire, and they have been actively utilizing this data. Self-driving is without a doubt going to reshape the world. As many major corporations faced reality, they realized this was not going to happen in a few years. Not too long ago, people thought we would have full self-driving cars where we don't need to pay attention by 2020. Level 4 self-driving and above for commercial sale. But it's turning out to be a lot more difficult than previously anticipated, especially for a commercial product. Tesla has such an incredible lead on this, and tons of cars with massive sensor arrays already installed and which can do rudimentary tasks unassisted in a commercial product, something you can just go out and buy. I said that true self-driving will change the world, and I stand by that. And Tesla has so much progress that it's very possible that Tesla ends up being the company that does change the world. Even with the possibility of another company getting true self-driving done, there's licensing. Self-driving is a cash cow and won't be open sourced. Having two companies, Tesla and another, is still a massive win for them. There are other things that could influence the price, like battery technology and ETF inclusion as well, but I think those deserve their own videos. Software and data is what I mentioned first because I truthfully believe it's the most important part, but the cars themselves enable the software and data. Tesla sold 367,500 cars last year, It has multiple factories in multiple countries, multiple models, supercharging stations everywhere, and they broke into the Chinese market. And not just that, they established themselves as an auto manufacturer with zero reliance on dealerships. Each Tesla car to come out has been better than the last. We can easily see this in the teardowns done by Munro and Associates. Tesla leadership obviously has a plan, and it's executing each step very well. Sandy Munro is a fellow engineer I truthfully respect. His teardowns are a great look into the difference between auto manufacturers. A lot of people talk about the risk of traditional auto manufacturers coming into the space. Tesla is years and years ahead, maybe even a decade ahead, from the current technology being released by traditional manufacturers. Not to mention companies like Ford and GM have fallen apart and stagnated, literally being propped up by the US government. I made a video mentioning this. I'll leave a link in the description. While engineering does take time and money, more important than those two, it needs leadership. There's a lot going on with Tesla, and I can very much see them staying at 1,000 a share or going even higher. But I'm not going to pretend that the risk of a drop is non-existent. The big question is, does it make sense to buy Tesla at this price? FOMO, or fear of missing out, is very dangerous. It is possible we see a bull run even higher than what we are at now, but I'm not sure I want to buy above 1,000. The options chain for Tesla is insane. Tesla is the most shorted stock in the world, and it has extreme volatility associated with it. You can extract a lot of profit without ever touching the stock itself. If you want to buy Tesla stock, but you don't want to buy it at over 1,000 a share, you can sell cash secured puts at the strike price you want to buy at. If you get assigned, you'll have 100 shares of Tesla purchased at the price you wanted. If not, you collect a massive premium supported by the volatility of the stock. You could just keep this up and keep collecting premium. And if Tesla reaches your price, you buy Tesla stock. Like I said, Tesla is the most shorted stock ever. So naturally, there's tons of people trying to make ridiculous plays on the stock. It's a pretty sweet deal to sell cash secured puts, but the catch is you need the funds to buy 100 shares of Tesla, which for a lot of people is tons of money to spend, especially on a single stock. However, if you want to invest heavily in Tesla, this would be my approach. The only major concerns are, 1, Tesla never hits your strike price and skyrockets, in which case you still make money, but you miss out on the tendies train to the moon. Or 2, Tesla drops way below your strike price and never goes back to the price you bought at. Massive losses. However, with 100 shares, even if you're in the red, you can consistently sell covered calls to try to extract profit from your Tesla shares. It's all about what you're willing to risk. I think the cash secured puts is a better idea, not because I don't think Tesla will go higher, but because I'm very weary about buying this high, especially since a tweet can dip the stock over 10%.